We have some interesting things happening in the volatility space, and this is correlation, which is at lows not seen since basically 2000, late in 2017. What do you kind of make of this as a guy who runs a correlation strategy?
Sure. So I am not here to talk my book, but talking a little bit about it will kind of explain the answers to your questions. So when correlation is really low like this, another strategy that we trade is basically being short vol or short VIX. Mm-hmm. So when nothing is going on, what do? It's a good time to collect premium. So what do you do with correlation down here in 2017? Using 2017 as a template or as a map, if you took off the position at the bottom in the 2017 on your chart, you missed a lot of opportunity. Mm-hmm. It continued to work really until January. So a lot of people basically didn't add enough size, or they took off their book trying to time it. And they really threw away about 6 months worth of P&L. And that P&L did reverse in January going into 2018 into Volmageddon. But the correct way to look at it was really more in isolation. It's so easy for you to look at where was something relative to something else, which is the point of a chart. But if you look at where is realized vol relative to where it's implied, where is realized correlation relative to where it's implied, it's probably still a do. And we actually added some size yesterday, which a lot of people would be like, why would you add size down here? But going back to 2017, if you sold VIX at 11, a lot of people would tell you that you're reckless and crazy. But what if I told you that VIX or S&P vol was realizing 6? It was still a do. That spread was still wide enough that you could mathematically and mechanically trade that for profit.